The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, the 29th of August. We're just about to wrap up the month of August. It's been quite a whippy month, hasn't it? Dow's down 238 to 32,046. Got a lot of questions, so let me just run these through. 32,000 was the low so far, 32,006 actually. I would say the 31,009 to 800 area is really imperative to hold. 31,500 is for me, I put it this way, 31,500 in the Dow on a closing basis. I'm going to have to reassess at least the intermediate term if that gets taken out. Most importantly, we've got we're long from starting off from the day of the low at 30,143. We took profits, we went back in, etc. But we've been buying almost all the way up. But we did short Wednesday this last Wednesday morning. We did have a short position for short-term traders, also as well as people who I said, I don't want to take off any more on the Dow Diamonds. I want rather to at least ameliorate any sharp pullback. So for those people, they've not seen any loss because we've been not quite one-to-one on the long to short side, but it's actually been a little bit more weighted towards the short side. But that, basically it was insurance. Anybody who's new to my work, or at least did my webinar just recently, etc., started a new position because they did not get into the diamonds. They got into the DOG, and that's one-to-one to the short side, and that's good. So basically what I'm looking at is intermediate term. I'm still positive of the markets. I love to keep focusing on the weekly chart. Weekly chart is right at key support in the Chapman wave inside track support. It was a repellent zone, then it became a support zone. Just at the moment, I would have to say it's still a support zone, but it's being tested, that's for sure, right there. Okay, I'm not wildly bullish. I'm not wildly bearish at this particular point. I think a lot of the work has been done. We knew that the Fed was going to remain tight. We knew a lot of things that happened. It was just the speed, the suddenness with which it happened, and that rally, which of course suited us for the 3 days going Monday, Tuesday, Wednesday, whatever it was last week, Wednesday, going from Wednesday into Friday's open with a slightly higher high, and that just allowed stops to be raised, etc. So we still have quite a big cash position. We're very selective. We have long positions, and we have a short position, but mostly we're in various areas. We're not really in major key equity market. We're in commodities, etc. So let's just go through this. So my stance right now is that I think selectively that sell-off on Friday gave an opportunity to at least start new positions or add to positions that were working. Only in sectors that have been working very well. I don't want, and I said that last week, we've tried, I don't want to do it anymore. I don't want to go for sectors that have been absolutely decimated, but show no real strength. I'm in the situation that says, time-wise and price-wise, they've had a huge consolidation. Now they've gone kind of sideways. They should be moving up. Shoulda, woulda, coulda. I'm not interested. I want things that are working. The ones that are working are the ones we want to stay with. So the Dow right now has been working right now on a short-term basis. No, it's not. S&P, which is down, let's see, Dow's down 216, S&P's down 22, has this arch formation. It took out the left side, right side price time match by a day on Friday by closing underneath the left side support of the low of 40, I think it was 40.09. Oh, what was that? 40.79? Yeah, 40.79.81. We went to a low today of 4,045, 4,021.60, attempting some kind of a bounce right now. We're looking at the QQQ which we went long way back, I think 22nd of July, via the 3 times long situation. We had 2 separate positions there. We took chunks of money off on the way up of one of them, then we got out completely on Thursday, I think it was. Friday, what we did was we raised stops, so we're still long, but we've now added a position. We had a core position as well, which made money in the very short term. We took some of that off and then took a 3-point loss on the QQQ. It's like a 1.2% loss, but we had a very, very nice gain, 7-point gain on the way up. So what we're looking at now is that we've started a new position. I don't know if it's going to work with the stochastics flattened out at 14%. The on-balance volume is kind of trying to hold. The MACD is still very weak, but the histogram, we'll see if over the next 2 days you can see a little bit of a rise in the 0% line that has started to improve a little bit. And the 9-period moving crossed over on Friday, negative. I'm hoping that there's hope. Remember, I know that a lot of people say hope is not a strategy. You know, I think almost everyone uses the word hope because you get the position and you don't know. How can you really know if everything is going to work? You can have a certain amount of confidence. You can have a certain percentage of confidence. But this is the world. Anything can happen. Anything can knock a market down or shoot it up. So all I like to say is the hope comes after you've done the homework because your bias is that you want things to go a certain way. That puts you in the category of hope. But you've already done the homework. So maybe we should call it hope work. The hope work's done. So now let's continue. We're looking at the IWM. I just want to finish this up, and then we've got a lot of questions I want to get to. Trying to turn into a green candle, but still down 83 cents at 188.13. Chart-wise, the 200-period moving average at the moment will still be a bit of a magnet at 194. But if it starts to go below today's low of 186.52, if it goes to the 185 level, that becomes a repellent. And then you get a very sharp pullback from a peak B in the weekly chart, but it's still way above the inside track repellent line. Okay, now we're going to go to the area that a lot of people asked about. Gold. Gold has a nice green candle right here. It's up 1756. It's just in a consolidation phase, way above the left side low back in the 1690s from July, screened up to the 1820s, and now it's at 17. It's kind of not quite the halfway mark, but it's trying to get to the 1764, 1769, 9 and 14 period exponential moving averages. The weekly chart is still very weak, but the histogram is starting to improve, and that's a good sign. Looking at silver, so to put it in perspective, today's low of 1731, if by Wednesday it's gone below 1720, it's back on its way to the 1700 as a big test. But if it holds and it actually goes to 1786, all of a sudden you've got gold having done a lot of work for consolidation, having a pretty decent bounce potential. Silver says, hey, that's going to be really tough. Silver's down 0.08 to 18.74. High-grade copper, rates coming up, is down after making a PE at 8.62. And the dollar, it's come back a little bit. Yeah, it's come back a little bit. It's down 12.68 off the new recovery.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So we've got a leg D in the 1-minute E-mini chart, a leg D in the 10-minute. It's gone to just over a 161 extension. That's a good sign. So I just want to finish these things up because now a bunch of questions are coming in. Let me just get to this. Take that. Okay, there we are. Now, what we're looking at is the dollar made a new all-time multi-year, it's almost a multi-decade high today by going to 109.48. It's pulled back quite sharply, but look, the MACD is good. Stochastics at 84%. The 9 is way above the 4. So the 9 is way above the 14-period exponential moving average. The U-shaped pattern in the weekly chart says to me you could be making a cup formation, and that says the dollar could be in for some kind of a dip very soon, but it's still acting very, very well. And it's a leg C extension in the monthly chart in the Chapman wave, which should still go to a leg D in 2022. All right, got that out of the way. EUR USD is trying to come back after a lousy overnight session and early this morning. There it is at 1.002, just up a fraction. But that dreaded H pattern in the weekly is really what we have to be focusing on, because the histogram in the weekly chart is improving just a little bit, but the stochastic and line are still very, very weak. I don't see anything more than bounces there. One thing I have to do is the USD JPY for the currencies. There it is, leg D. That's what we wanted to see underneath the previous high of in the 139s. This is a high today, is 138.999. Can you get any closer than that to 130.39? I'm not so sure. Okay, D, leg D, and peak F. But if that goes to new high, I will still call it a G. I'll keep the count going like that. And it'll be the cup formation. Then I'll be measuring the high that was made back in early July in the weekly chart and the high that's being made this week. And you'll see the technicals. The MACD is weak. The stochastic is rallying. It's still way underneath what it was in the high that was made in July. So I'll put this in just so that you know that we're looking at it. Okay, I've got that, got that. And now I want to do TLT, so bonds. So the question came in, VIX is in leg D. I'll have a look at that in the daily chart in a moment. bonds can give you your thoughts on the 2 10-year yields that everyone seems to be giving crazy focus and impact of markets. You know, when everyone suddenly starts on something that was just so esoteric, it remains esoteric. It is a factor. It's like looking at the 10-minute chart when you're trading the 120 or the 120 when you're looking for the daily, because it's a little speedboat that gives you the turns. It's not the super tanker. The super tanker here says that the TLT made a low back in, I can't remember now, April, I think. Yeah, it was April at about, was it June, July? Oh, it was somewhere in June, in the 110, 50 or 60 area, and then ran up to the 120s peak E and then came back in the same number of bars, and it took out that it went to 110.86. It took it out by a penny. I remember now on the 23rd of August, and now it's bounced. All I'm saying is that we've known that yields need to go higher. We know that the Fed, that's their determination is to do whatever they can to, as Tommy Jr. was saying just in his show, the market kickoff, fabulous. He just summed it up real succinctly. He said, let me just get that soft. He said, the Fed's charter basically is full employment, number one, and number two, price stability. I think it's a little bit, there are slight variations, but basically I think he's just nailed it. That is, in fact, pretty much their charter. And you can see that yields remain in the low, the TLT and bonds are remaining in the lower area, and the yields are up in the higher area. And I don't want to show it right now. I don't want to mess around. I've got a little bit of too many charts up right now. I just wanted to say that I'll look at the triple yield charts later on, maybe tomorrow. I'll refresh and then I'll get to them. But if you want to look at the TNX, which is the 10-year, look at this is the 10-year. It's at a peak E. It's pulling back a little bit, but the technicals are still strong enough to say yields should go higher. They might stall at the 34 level, 3.4. But at this point, at 3.102, I can see a little bit more. I think they're stuck in a range. Let's just put it that way for the moment. Okay. Did that do that? Crude oil. Okay, here comes the question. I'll cover a bunch of things. So a number of subscribers and a number of TFNN listeners emailed me to say, hey, what about crude oil? And as far as I'm concerned, crude oil is in play, but it's in the lower range. And it means that because it's in the low range, it can rally. And where should it rally to? Maybe the midpoint, not even the midpoint, maybe a full 1/3 of the 2/3 that we look at. In other words, it's at 95.78. And I would say between 99 and 101.50, maybe let's go to 102. I can see a bounce, and I can see a bounce being very beneficial to many of the areas that are based in the oil sector. Look, the stochastics finally got to 81%. The 200-period moving average daily is improving. The 9 for about 4 days has been above the 14-period moving average, so it's green. We used the 200-period moving average umpteen times to really spring to the upside. It's like a springboard, trampoline. So I like it. I do believe, unless it's something that we're just not even expecting, that the 86 to 85 area will be sacrosanct, that it'll hold at least for the next few weeks as key support, unless something really amazing happens and it starts to tank it, because it goes to 83. Crude oil, at least for this phase, is kind of done for a while, because it'll be under key support levels in that weekly chart with that massive spike to the upside back the week of the 11th of March into the 120s, and then a pullback, and then a spike back just underneath it, and it fell, made inverted its Eiffel Tower straight up, straight down pattern, like the pyramids, Egyptian pyramids, up there and comes down. So this is a good bounce that we should see. So here we go. Question, where did the question come in? I go to the questions. I had it already. Okay, let me just go one at a time. And the first question that came in, Walter wanted to look at, he said, 2 key charts. And thank you, Walter. That was great to hear from you. And I'm so pleased you've retired finally, and you sent me the email that you had actually sent me back in October of 2020 and November of 2020 when we had gone long the GBTC, that's the Bitcoin fund, and that did fantastically. And you also, you now have time for many, many things that you didn't have time for before. So you're very well written. I like your questions. So you said the XOP. So I'm going to cover this right now because it also covers a question that I had about something else. So within the question of the XOP is the Oil and Gas Exploration Fund, and it's trading at 152.04. It's up $3. And now this is what I wanted to show. It made a PD in the Chapman Wave. I know you've taken my courses. You've been with me for way back. You say you have my original CD introducing the Chapman Wave. You even have a printout material and a binder going from that early 2000s, 2005, 2006. This is not an instant restart, but it has the same characteristic as instant restart to being an AD. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So here's the question. Okay, so remember, I'm all about the semicircle up and semicircle down, the arcs and the cup formation. You can just see we've been wiggling, woggling, making higher highs and higher lows, basically in the E-mini 1-minute chart, but you have got to a peak D, or leg D. This could be a peak D right now, so be prepared for some kind of consolidation. I would prefer this, just a steady disbelief of slightly higher highs and higher lows to start getting back to a decent rally going into Wednesday. It's really important that we do that, because if we break down and go below today's low, let's see, by today or tomorrow, that's just really going to stall everything. And then I have to be looking more at the downside than the upside. But look at the rotation we've got here. That's where we've got a rotational market. So we've got XOP, which is the S&P Oil and Gas Exploration Fund, trading up 3.25 at 152.28. This is leg D. Remember, this is not an instant restart because it has to be within 3 bars. You make a new recovery high, and that starts E/A. You don't have to type anymore. I say you don't have to put the E/A. You just know that it's E/A, F/B, G/C, and then you can I always put G/C to say, hey, there was an instant restart. In this particular instance, that was a sell signal and a buy signal. So that's what we've got. But look at the weekly chart. It's filling in this ugly, this horrible, after the doji peak G at about 170. That was back in early June. Yep, the first week of June. You come in with the week of the 17th at 157.30 after the doji candle high. You gap down and you go from 157 down to 127. This is in 1 week. Now, that was a sell-off, right? So now we've almost filled it in. So that tells me that the top of this, and that would be at 157.30. The high was 170.62 the week of the 10th, second week of June. That's going to be your resistance area. So, yes, we're getting to some kind of resistance. But this is in play. Look, a flat stochastic at 92% on balance volume was a tad toppy, so it pulled back for 2 days, and now it's trying to rally again. 9 way above the 14. The green price is way above the 9. The MACD is good. Everything's positive. So here we go. So what was the question? Looks to me like peak E on the monthly. Oh, remember peak E absolutely on the monthly chart. 1 bar sharp pullback under the 14-period moving average makes a Chapman Roman candle. So far, it looks almost like a Roman candle again. And so far, this is very and a peak B on the weekly. Yes. So this now gets called, I make this gray because it's way underneath the previous high. It's fabulous price movement, but really the MACD is only just turned positive. Stochastic's still only at 55, and the on-balance volume, the blue line, it's not that great. But look at how the on-balance. Remember, I had this webinar a couple of weeks ago. Look at that. And people say moving average, etc., they can't really give you turns in the market. And I say, it depends on how you work, how you use these things. Look at that turn in the MACD right at the high. Right there. You didn't know it at the time, but look at that on-balance volume. Look at the stochastic. Everything turned on that week of this, 11th or something of June. So this is a good sign. And the weekly chart leads you to the monthly chart, which has almost the same pattern. But look, the MACD is strong. Stochastic did pull back to 68%. On balance, volume is very good. And look how it's nicely above the 9 is above the 14. So this is still in play, which now leads me to the question. I'm going to mix questions between people. And the question came in here. I think I wrote it down. Let me do this because they're kind of related. I'm moving once again off topic, but directly on topic. Matt wanted to know, how did you get your wave count in the... I got to go to the exact question because I mislaid it. Oh... Don't use them for fine arts, not that piece of paper. I'll get it. So the question, and it's a really good question, was the notations. So as I'm finding that, let me go to the question that I have that relates directly to the oil service area. So, Basil, which is my best bet on one of these 3 stocks, HEL, KMI, or SLB? Thank you. So I'm looking at this. Let's go first of all to HAL. Halliburton, always been a fantastic thing. You remember Liz Cheney, wasn't it? Am I right? Wasn't Cheney involved with Halliburton and he was just demonized? Wait. Wasn't Liz Cheney demonized the whole Cheney family? Funny how politics works, huh? Well, Halliburton went to 44. That was back in June. 43.99. Oh, it must have bought a penny. On the 17th of June. And that was on the 10th of June. And then it pulled back very sharply to 26. I would say 44 to 26 is a pretty big pullback. And now it's gone peak A in the weekly chart and a gray peak, a gray leg B. We know the week's only just started, so gray leg B. So let's look at that chart and say, well, in the context of the monthly chart, G/C, let's just say that 1, 2, 3, that's not an instant restart from that peak D. It's had a pretty big pullback, and it's got a lot of work technically to do to make it up. Yes, the daily chart, 87% in the stochastic, now nicely above the 200-period moving average. But have a look at the chart itself. The chart says that there'll be tremendous resistance, and I'm not going to tell you more than I want to look at the various, the three that you've discussed. In fact, two of them were on my list that I followed closely as well. So Halliburton has not been on my list for a long time, not because I don't like it, I just forgot about it. So here's your cup formation within the rectangle. Look how the 200-period moving average was a stalling motion. It's still kind of a stalling motion. It's up at 31.73. It's up 62 right now. Let's put it in the category of it's got a lot of work to do, because as soon as it trades in the 34.30 area, now I can say, great, it's filling in gaps, it's doing everything it needs to do, but it hasn't done it yet. So that's number one. Number two is you want to look at the KMI. So KMI is the one that I used to have all notated, Kinder Morgan Inc. And I think Kinder Morgan, I forgot to put down what they did. I thought they were more in finance, or let me just see. What does, maybe someone will just type it in. What does Kinder Morgan do? I thought it was one of the largest energy infrastructure companies. Yes, it's infrastructure. Got it. I remember now, it's coming back to me. Okay. Kinder Morgan Infrastructure operate approximately 83,000 miles of pipelines and 141 terminals. Well, they're not going away. At least I hope they're not going away, because that'll be kind of sad. So, yep, I'm just putting, I won't type it in now. So let me just do this real quickly. Always look for the lowest low bar. Yeah, you can put an up arrow immediately, visually, to say question mark whether that was the low. Of course it's the low. You can see it's the low. When you're doing it live, I always start off with a plus sign, and then I upgrade it to an up arrow. And then it can go from a buy signal to a buy mode. So I'm going to call the C1, C2. I'm not going to get into exactly what it is right now, because we don't really have time. Maybe over the period of the week, I'll go back and look at this. And then this is a brand new A. That's a B. That's a C. And that's a D. It's a much better looking chart, both for the daily, the weekly, and it's trading at $19 up a penny. The weekly's improved. It's filled that gap. And the monthly, I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Just to clarify a comment that was made in the den. No, as far as change is concerned, I'm only talking media. I'm talking about how the media portrays whatever they want to portray. That had nothing to do with politics per se, other than to say, I remember distinctly every hour of the day, Cheney being lambasted, and it's just interesting how the media tries to favor whatever they want to favor at any particular time. So KMI is Kinder Morgan, and I like this chart very much. It's at 19. So far, it's the better of the two. SLB, Schlumberger, Canadian company, and it is trading at, there it is, SLB. This is a little better, but not that much better. So, and I'm going to change this. This is going to become a peak A. I haven't actually looked at this for about 2 weeks. A, that would have been E/B, and immediately changed, E/B. That becomes C, and that becomes D. All right, so that is at a peak D in the daily chart with very, very good technicals. It's got the left side, right side price time match, which would have been to that candle right there. So it's kind of done everything it has. It needs to fill in the gap, and that gap right here is the gap from SLB trading at 38.87, up 45 cents, at up 1.14%, and that's the gap from the high of June the 16th. That was at 40.66, and the low the previous day, that was the gap down following session, so 41.15. So 41.15, we've got not much, about 60 cents or so, and the high that was made just the other day was 40.90. So we're into the gap right there, and that's a good sign. So now you want to see that candle as the target. So this is out of the three so far, 39.96. Schlumberger is acting a little bit better. Out of the three patterns themselves, KMI, and I wouldn't have said this if I hadn't looked at the chart. I would have said, I haven't looked at it for a while, but didn't it have a huge pullback? I did remember that pullback, KMI. That was the one that went to the June low under 16. And now looking at the way it's come back, that's a good sign. Look at the way the determination of walking the 9 and 14 period moving average of the monthly chart, and it should still go to a leg D. This is probably the one that I like best at 18.98. Now it's down 8 cents, but it is a peak D. So I don't want to talk about, you didn't ask me how to get into it, anything like that. You just asked me which one is the one that I like best chart-wise. This is the one I like best chart-wise, Kinder Morgan. And I also like the fact that it's in the 83,000 miles of pipelines and 141 terminals, transports natural gas, which has been really doing very well. gasoline, crude oil, carbon dioxide, CO2. I think it's just a better looking chart. Now, if it closes under, I don't see in price. I mean, you've got 17.81, so that's just 1.5 points. That's 10% risk. But I'm going to suggest that if this is the one that you actually prefer, then maybe scale in. Don't do it all right now because it is a leg D with a potential peak D. Just saying maybe it pulls back a little bit. You could get somewhat of a better price. It's not the point. The point is, where do I think it's going? And my answer is that I think it's going to go to, and I just need to double check this. I was going to do it the moment I started typing and then I forgot. The high of the high of April was 20.19. The high of June was 20.16, 3 cents lower, and then the high of 20.20. That's why I wanted to do it. You can see my eye said, you've got to go back. It looks like there was a penny difference. It has already made that peak D in the monthly chart. And that just says it's fulfilled the obligation of the Chapman wave to get you from a buy signal to a buy mode, at least 4 higher peaks, peak D. You can go higher, but that was the objective. So it's fulfilled everything. It's acting very well. I would probably think of scaling in. And if you really want to know, we can go through that again in the next day or so. Have another low trend. Okay, I don't have a low trend. It's very interesting at this particular point. Now I'll go back and have a check. Actually, I'll check it out during the break. So the other question was XLU. XLU. Oh, didn't mean to do that. Don't do it. Don't do it. Let's move on. If I typed in XLU, I would have got rid of all those charts. XLU, this is the utility index, XLU, S&P Select Utilities Fund, made it doji candle peak G, and that is a peak G. I haven't got an alternate count at this particular point, but it's only pulled back. The 9 is still over the 14. It's a peak C in the weekly chart and a G/C in the monthly. And look at this. I wanted to show you something here. Matt, I hope I'm going to get you to answer your question and see if I must find your full question in a little while. So you see this? I've discussed this, and I've discussed this many times, but I spent a little time on it in my webinar, and I said sometimes with the V-shaped turnaround at the bottom or even at the top, you can't draw a channel because the steepness of the low that's made to any of the troughs, the second trough after the first trough is made, is so great that you're just going to cut right through it. But try to find a level where you can start that gives you, by eye, it just gives you everything visually, and that'll fit. And lo and behold, look, by eye, all these support levels are just perfect in the monthly chart from the low that was made March of 2020, around about 43. And then what happened is it ran up. And you remember my theory that if something's in favor, it can go in big favor or big small favor. But if it's a rising tide and it's on an elevator and the platform of the elevator is rising or the tide is rising or the boat is rising because of the tide, the same amount of percentage gain, that's how you get channels. The same emotional thing that says, rally, oops, it's overdone, I'm tired, I want to rest. That happens in charts because this is human nature. What we're looking at here is a fractal of human nature. And every time it rallied, it got to an abundance of enthusiasm and it pulled back to support levels. So you can see the utility index or fund has been repelled from the Chapman wave inside track repellent zone, which is part of the up channel, the outer rim of the up channel, and the outer rim on the downside is support levels. So that just says bonds are one thing, but the utility index, which has in a sense, because you've got utilities, these are government utilities, these are state-run utilities. You've got a sense of a cushioning on the downside. So yes, the XLU is in G/C in the monthly. My preference right now is to actually keep it as G/C. I'm not favoring C. I'm not favoring G. I'm just saying let the weekly tell because it's made it peak C. There was a big pullback from the peak F/B. going from 77 down to 64s and then back to 70, just under 78 for that doji candle high. I'll be back in a moment to talk about the XLE. Dow's down 250.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Oh, yeah, I got the question from Matt. Matt wanted to know what is the New Fortress Energy Inc. A shares, natural gas fuel solutions is what we've been long. From the, I think, what was it, 45s from the, 45 level, and hit 63 3 days ago, still acting very well, down just 44 cents at 59.62 right now. So you want to know about the monthly chart. So the question is, I'm not clear on why you have an A peak in the monthly when there was a lower low after that leg. I've marked up the chart to what I understand to be a proper Chapman wave count. Can you look at it? So this is the issue. And I actually circled it and I discussed it in my 45-minute long, or whatever it was, video on my overview of the market on Saturday. That was your starting point, the low of 2020 at $7.01. It ran up to peak A. There's your little A. 3 bars later, was at 2020. That was in May. Peak A, then peak B, and then peak C, January of 2022 at 65.90. Then it pulled back. But you see that peak. You remember the obligation of the Chapman wave is to count every peak Notate every peak and trough. That's your only obligation. Well, that is an A. It's not that low. If that was a D, absolutely, this would be the potential start of a new leg up, a new bicycle. No, this is a continuation. So that is A right there on the week in October of 2021 at 36.25, and then it pulled back sharper to 1917. That's okay. It's still A. Then it becomes B, C, and now in leg D. So it's finally in leg D. Fortune's energy. So that wraps it up today. A lot of questions, almost like the Technical Friday. Let's see what the guy does by the end of the day. Don't be sanguine, just be very selective. We've raised cash and we've still got some trades in. Have a wonderful day. Stay tuned for Steve Rhodes and the rest of the gang. I'll be back tomorrow. Check out my opening call.